Hello again. The recording has started. Welcome to the September session of Nakisa Office Hours. As you are seeing right now, the agenda. What we have today in the agenda to present you is a capsule on report scheduling. Then we'll be discussing and reviewing a case scenario for decreasing asset value. You might remember we presented a different type of decrease in scope scenario, decrease in lease term in our July session. And in the last part of today's session, we'll be going through important dates in Nakisa. This is in reflection of several questions that we had in the past period. We'll be going through these dates and we'll also be looking at examples. I have a feeling, though, that this session will also continue in our October session. So please send your question, your comments. We're going to take the time to go through these details. So with that in mind, we are going into the first topic, the report scheduling, and I'm passing the mic to my colleague Pratibha.
Thank you, Catalina. Hello, everyone. Hope you all are doing good. Firstly, I'll share my screen. Can you see that?
We can.
Okay, great. So today I'll be talking about scheduling reports. At times, when the reports are quite heavy, it might take a long time to generate, especially reports like consolidated transaction report, which shows the list of transactions that have been triggered to be posted. Since it has a lot of information, it will take a long time to generate. And if we need that report to be generated every month or every quarter end, instead of generating it and waiting, we can schedule them for midnight or so, and the next day it will be readily available. It can set to automatically run on a monthly or quarterly basis, and we can schedule up to 20 different reports at a time for each type of report. We can also see, we can only see the schedules and reports that we generate ourselves. So we cannot see any schedule that are generated by other users. And let's go to the demo. So I'm taking consolidated transaction report, and I have already set up all the filter. I've saved a filter. And the period here starts from January to December 2023. So instead of clicking on generate and taking a long time, you can click on schedule. Here we can select either monthly or quarterly. And let's select monthly for now. And then set the day as 1st of every month at 12 a.m. And if we select, let's say 30 over here, then no report will be generated for the month of February. Therefore, I prefer getting the reports on first at 12 a.m. or so, and I get the details until the end of the last day of prior month. Another thing to note is the log entries over here are in Coordinated Universal Time, UTC. And now if we select the increment period start or increment period end checkbox, it will increment the reporting period start or end dates of the next scheduled report. If these both are unchecked, then the scheduled reports will cover the same reporting period. For example, here we have from January to December on our first report. The next period will also be January to December if these two are unchecked. But if we check them, for example, let's say I check increment period start, then we will have the first report from January to December, and the second report will be from February to December, and then March to December. And if I click on increment period date, then even the end date will move. The first report will be from January to December, and the second report will be from February to January 2024, and then March 2023 to February 2024, and so on. And once we schedule them, we can find the list over here, and we can have up to 20 per report. And once the scheduled time has passed, we'll see the download button, and we can click on them to extract the Excel file. Do we have any question?
No, no questions. You may continue, Fatima.
That's it for me. I will pass on to Haley now.
Thank you so
Okay.
much, Fatima.
I have a
Sure.
question.
Yeah,
actually.
sure.
Is there an option to, because I see the period starts, for example, January 2023, and the period ends is December 2023. Is there an option that I can download, for example, as I do the reports by monthly? For example, for September, is there an option that I can put January until September?
You can definitely keep the period end as September, and then
after
schedule
that, do
them.
the schedule. Okay. Oh, okay.
Again, if you
Great.
want the same report, then you can
Mhm.
you just need to keep the increment button unchecked.
Okay, great. I see now. Thank you.
Perfect. Well, if there's no more questions, I will continue with our next topic. So I'm just going to share my screen. Oops, sorry, give me 1 second. Can everyone see my screen?
We
Yes.
can.
Perfect.
Yes.
So today we're going to be covering a decrease in asset value. So a decrease in asset value is a type of decrease in scope. And in Nakisa, we offer 2 decrease in scope reason codes. So the first one is decrease in lease term. And then the second one is a decrease in asset value. The difference between these 2 reason codes is going to be the treatment under US GAAP, which differs between a decrease in lease term and a decrease in asset value. In the July office hours, we did cover the decrease in lease term. So if you would like to review that session, as well as the case scenario that we presented, that can be found on the office hour website. Additionally, we have examples of both decrease in lease term and decrease of asset value in our user guide. Before we get into today's example, I just want to mention that a decrease in scope scenario may require complex judgment, validation, and checks. So we recommend that you perform tests in QA before doing so in prod, and that the accounting team is involved in the judgment behind these procedures. So we are going to go over what is required for a decrease in asset value, and then we're going to do a case scenario in the application. So a decrease in asset value gives you the ability to decrease the carrying amount of the right of use asset and the carrying amount of the lease liability in the same proportion, but in a different absolute value. This is done through a lease modification with the reason code decrease in asset value. An example of when you'd want to use this would be if you, the lessee, and your lessor decide that you're going to decrease the amount of space you're renting. So the example that I have here on the screen is you're leasing 1,000 square meter office space. And during the course of your lease, you, the lessee, and your lessor come to the agreement to reduce the space rented to 500 square meters. In order to perform a decrease in asset value, we will need to perform a lease modification at the contract level using the reason code decrease in asset value. It's important to note that you should unselect the modified contract rate for this reason code. No other modification should be performed at the same time as a decrease in asset value. If you did want to modify the contract rate or do any other type of change in the same period, you need to perform a separate event, but you could use the same effective date. In this lease modification pop-up window, you're going to be asked to enter the ROU asset decrease amount, and this represents the amount by which the right of use asset will be decreased by. In the example that I have on the screen, my contract is classified as a finance lease for IFRS and an operating lease for US GAAP. That is why there are two fields to enter. However, if you only report under one standard, or if your contract was classified as solely finance, you would have just one field to enter. You can apply different methods to determine the amount to decrease the right of use asset by, depending on your internal policies. There's also a description field where you can add a description to this lease modification. This is optional. Once you are satisfied with the information you have entered, you can click submit and a draft will be created. The information we just entered is affecting the asset side. So now we need to go and reduce the liability side proportionately. In order to do that, we must add a reduction term to the terms and conditions at the lease component level. So first, we're going to navigate to the lease component level, and we're going to add our new terms and condition, which will be a reduction term. We want to make sure that our reduction term is proportionately reducing our liability. So in the example that I've been showing, we have a 1,000 square foot office space and we're reducing it to 500 square feet. If our base rent is $1,000 per month, we would want to reduce that by 50%. So we're adding a reduction term of $500 per month. Additionally, our first payment date and our expected terms and conditions start date should be set to when the decrease in asset value is taking place. So when you're doing this modification. Once you're satisfied with your reduction term, you should continue to follow the normal workflow for approval of the contract, the lease component, and the activation group as if this is any other type of modification. It is important to remember that you'll want to exercise that reduction term at the activation group level. You're also going to be asked to select an effective date, a posting date, and a document date in order to send the activation group to assessment. Significant judgment is needed to determine the effective date. So there's a couple of considerations that I've put up here to take into consideration. So the effective date cannot be before the effective date of a previous event. It must be in the month during the lease term, and it must be in a month that does not have any payments, accruals, or asset depreciation already posted. The last 2 points on the screen depend if your payments are in arrears or in advance. So I will let you read those depending on your case scenario. Once everything is approved and your draft has been merged, your contract will return to an active state, and then you can see the modification entries that have been posted. Your application is going to generate 3 adjustment postings, one for liability, one for asset, and one for gain and loss. So as we can see here for both standards, the application is posting the same adjustment postings, but we have different numbers because under US GAAP, we have an operating lease, and under IFRS, we have a finance lease. Before I jump into the application and do an illustrative example together, we're just going to cover quickly the differences between a decrease in asset value and a payment reduction. So a payment reduction is triggering an adjustment for the same absolute value of both the liability and the asset, where a decrease in asset value, which is what we just covered, is decreasing the carrying amount of the right of use asset and the amount of the lease liability in the same proportion, yet with a different absolute value. Therefore, your decrease in asset value is going to trigger your gain and loss, whereas a payment reduction will not. Decrease in asset value is considered a decrease in scope. I will now jump into the application to do a case scenario with everyone. So I have already created a contract for this example, but together we'll review the terms and conditions just so everyone is aware of what we're working with. So under our terms and conditions, we just have one term and condition. It's a base rent of $1,000 monthly, starting January 1st, 2020, ending December 31st, 2022. So we have a 36-month contract, amount frequency one time, and payment frequency monthly. I am the lessee, and me and my lessor have decided and have agreed upon, as at January 1st, 2021, we're going to reduce the office space I am renting by 50%. So in order to input this into the application, we start up here at the contract level. We go to our contacts menu, which is these three dots, and we're going to do a lease modification. First step is we're going to need to pick the date. So we are performing this lease modification on January 1st, 2021. And our reason code is going to be our decrease in asset value. Our modified contract rate is required to be unchecked for this reason code. I have already calculated our ROU asset decrease amount for both our finance and operating leases. So I'm just going to grab them from off the screen and enter them in here. For my description, I will enter September office hours decrease in asset value. This field is optional, so it is up to you if you would like to enter any information on the lease modification you're performing. When we click submit, our contract is going to go into draft state. We'll just give it a minute or two. Perfect. So we can tell it's in draft state because it says version draft, and we have this yellow bar at the top. The amounts we entered in our pop-up are what is reducing our asset. So in order to reduce our liability, we're going to need to add our reduction term. So from the Jump To menu, we'll go to our lease component and our terms and conditions. From here, I'm going to add a standard term, and we're going to do a reduction. Since we decided to reduce by 50%, we can see that our original lease amount is $1,000. So we'll now want to reduce it by $500, which is 50%. We're going to select the same amount frequency and payment frequency as the base rent. Our first payment date is going to be the date that we would like this modification to come into effect, which is going to be January 1st, 2021. Our last payment date is going to be the same as the base rent, as this decrease in scope is going to take place for the rest of the lease term. So the end of our term is January 31st, 2022. I will then copy paste those dates down below, and I will click submit. I'm now going to use the Jump To menu to go back to my contract, and I'm going to send to approval. Since I'm in our demo build here, I have access to approve as well. However, in your production, it would be someone else. Once my contract and my lease component are approved, I will navigate down to my activation group, where my first step is going to be to make sure I check likely to exercise on my reduction. Next step, I'm going to send to assessment. And here's when I'm going to need to pick my dates. For my effective date, I'm going to pick January 1st, 2021, as this is the date I want my modification to take place. For my posting date, if you're connected to SAP, you're going to want to pick an open period. And your document date is purely for documentation purposes. There's no financial impact of this date. Once you are happy with the dates you've entered, you can click Submit. And our schedules have been generated. So I'm going to review our schedules before we continue. So we'll click our three little dots and we'll click View Schedules. First step, I'm going to go to all our years and view all columns. We can now see a green line, which indicates an event has taken place in this period. Here we can see our reduction term that we entered coming into play to reduce the amount that we are paying every month. And if we keep scrolling over to our opening liability, we can see that it has also been reduced. And we will continue over to our delta columns. This is the amount that we entered. We're under IFRS. So this is the amount that we entered as a reduction to our asset. This is our gain and loss. And then we can see the difference, which is going to our liability side. We can also look at our US GAAP schedules. And we will see the same thing. So we'll see the amount that we entered for our asset. And we can also see the decrease in our liability right here. Additionally, we can see our decrease in our payment term as well. Once we are satisfied with our schedules, we can return to our draft activation group and click Approve. We'll confirm our classification. And then to finish the lease modification, we're going to return to our contract level. We'll go to our three dots and we're going to click Complete Assessment. It's going to ask us, all the changes made to the draft will merge to the master version and cannot be reverted. Do we want to continue? So at this step, we can no longer delete our draft or make any changes to our draft. So at this step, I am happy to merge. So I will click Confirm.
Yeah.
We'll give the application a minute or two.
So while the system is merging the draft into the master version of the contract, do you have any feedback, questions? How do you deal with your decrease in scope scenario? Do you have any particular policies internally? Would be interested to know more,
Yes.
more of that on your end.
Yes, and then now that it is all also activated, I can show you the unit postings for our modification, which we'll see here, our impact to our asset and our impact to our liability, where we're seeing that gain and loss come through. Are there any questions, or as Catalina said, how are you guys managing your decrease in scope at the moment? Okay,
Hi.
if there's no, oh,
I
Yes.
actually have a question or just a comment. So
Yeah.
this is Elena at 3M. And so a couple years back, we did one of these and we were able to write off the whole asset value and leave the liability value. So it was a situation where we walked away from a property. And it takes a couple months, right, for all the legal stuff to happen, but they wanted to show that we did not have any right to that asset at the end of the period. And so we were able to, on here, we were able to write down the total, net book value. Now it only allows you to write down to like the last period's depreciation, and then that is scheduled over the life of the asset, because we've had 3 more instances this year where we had to do that, where we, until the legal can be handled, we still have the legal liability, but we don't have any right to the asset because we've either given the keys back or left the property or those types of things. And so we wanted the asset to be 0, and the liability to still remain until we actually solve that. That makes sense.
Hi, Alana. So what you're describing is a bit of a specific scenario because we're setting the asset to 0. It's not a decrease. It's in a way equivalent to a full impairment, but that is the need. It is a case scenario, and it's not fully supported to the decrease in asset that we are seeing right now. However, we do have ways to support such a scenario. So if you can reach out to us, we can look into your specific scenario. And I do believe you're reporting under US GAAP only.
Yes. Yeah.
So this is one of the reasons that you were seeing that that workaround with the loss depreciation, especially for operating classification. We have a lot of validation in the system to make sure that the net book value doesn't become negative. So that's the reason that the full decrease and the full impairment is not currently supported, but we are supporting it in our next generation, and we have a way to help you with your specific case. So please send us the specific case. We'll help you out.
Hopefully we're done with that, but we'll see. Yeah. So thank you.
You're very welcome. Right. Go ahead, Ailey.
Oh, I was just going to say, if there's no other questions, I'm going to pass it back over to Catalina.
All right, so I hope there are more questions as we did had a lot of inquiries lately, and I was hoping that we'll have more questions and feedback, but that's okay. We'll have the session out there, and we'll probably continue to discuss on this. One last point to take, as Haley was mentioning, the decrease in scope situation are typically complex scenario, and you can go up to the point as Alana was describing where you need to set the asset to 0. So for those questions, we welcome you to come and discuss with you. It not may be a very straightforward scenario. It might require additional testing, and if I remember from my life within the accounting and finance department, such cases are typically more complex, and we are here to help you. We have enough terms and conditions to support your case scenario, but it's harder to work on a concept or on something that we know or make reference to. It's always easier to work with your specific example and towards the targeted end result. So please let us know your examples, and we can work with that. We'd love to have your feedback. And with that in mind, I'll continue with the next topic that we have prepared for today, and it is about the dates in Nakisa. So let me share my screen back again. And I hope you can see my screen. I can't really see.
Yes.
Yes, we can.
Perfect. Thank you so much. All right. You might remember that we covered this topic in some of our past session, but the subject is coming up again, and we wanted to talk a little bit more and to gather your feedback. And also, we are as you know, we are constantly innovating, constantly enhancing, and we wanted to also gather more feedback from you on certain suggestions, for example, the system does. So we have prepared a small capsule for today, but as I said at the beginning, I think we are going to discuss some more over certain topics. So once again, your feedback is very important. We have all those first payment, last payment, expected start, expected end date, and as Haley was showing her example on decreased asset, she went over those dates. So for terms and conditions, these are very important dates. In a lot of the situation, you will have those dates already at hand. You will have them from your contract based on your accounts payable policy. You will have them already. So it's easy just to enter them. But if you want to rely on the on some of the suggestion the system does, we're going to show you some recommendations, some suggestions today. Then other important dates, and when we're saying important dates, they're dates that have an effect on the all column schedule, on the accounting translation of the details. So we get into effective date, activation date, and posting date. So we're going to look at some example of those. And I have here, and this is something that we will share with you. You will have access to some definition. We talk about all these important dates, but as an image and a demo is easier to follow than words, we're gonna jump into the demo right now, and you will have this deck for you to come back to follow that and to adapt it to your specific examples. So let's get into the terms and condition dates. And for that, I am going to share my application. I hope that everybody is seeing my application right now. I am presenting a contract that it's in defined status precisely because I want to go over the dates to input in terms and condition. So the contract is in defined status. I'm at the lease component level, and that's where I first encounter the dates. And as I choose first, as you know, in Nakisa, you absolutely need to have at least a base rent, at least in this particular version. So I need to start with my base rent. So that will be my first choice here. As you can see, I only have one option. I'm gonna make it a bit bigger so everybody can see. I chose base rent, the lease amount, this is something that you probably have in your contract. So now I'm getting into the dates, and normally following the order that we have them here, we'll start with the first payment date, last payment date, and then we'll continue to the terms and condition beginning and end date. But this, you can accomplish this only if you have already your dates at hand, you prepared something. Remember, we were talking some session ago about having your a list of payments based on your contract. So if you have that at hand, then it's easier to start with your first payment, last payment. And as you were doing events, this will be more clear when exactly is your first payment for these events. Now, if you are entering the contract and you just have your legal document at the side, what I would recommend is for you to start with the expected terms and condition, start at and end date. This is the beginning of the contract and the end of the contract. So if you haven't prepared something on the side, this is something easier to follow, at least our recommendation and suggestion. So let's say I have a contract that it's starting in January 2023. I know this is my start, and I can say, well, it says it's a 36 months, 3 years contract. I don't need any days. So I completed my start and end date. Now I'm coming back here to the payments, and based on what I know from our accounts payable department, I'm supposed to pay monthly, once a month. And my accounts payable is telling me, well, we're paying on the 15th, let's say. So I'm entering this. As I'm entering the first payment date, you notice that the system has already filled in a suggestion for the last payment date. But as the last payment date is not an actual payment date, it's just a cutoff. It's pretty much a date where we say, well, after this term, there won't be any more payments for this particular term. So after September 14th, 2026, I won't have any payments for this term for this contract. But as you are using templates, as you are using other ways of creating the contracts, you probably know already it's easier if you consider this property of the last payment as a cutoff, and you use the same date, the last payment date, to be as the end of the terms and conditions. So I can include this in here. I can, and I'm sure that I will have my 36 payments. This is what I wanted to know. Of course, very important. Okay, my validation. I wanted to start with January, and I put September. My first payment is on the 15th in January. So very important after this, my expectation is that I will have 36 payment as well. So the validation part remains, and it's very important always. And independent of what the system is suggesting, once you get to the schedules, it's very important that you verify the payments. So I've entered my base rent and I submitted it. One thing I did mention, and I put it in the schedules, is that depending on the terms that you choose, so now that you enter the base rent, you can enter other terms and conditions. So for example, if you're choosing incentive for incentive-free rent, for example, you don't need to fill all the dates. You will just have to fill in the dates related to the payments. The reason why is that, as you remember, the incentive-free rent is just pretty much telling the system what payments am I skipping, I'm not doing. So here, let's say I want to have 2 months free rent, and my contract started in January, and I want to have March and April 2023. So I'm going directly to my first payment, which is the first payment that I want to skip. I'm sorry. So I'm choosing the first payment date, and here for the last payment date, I do want to specify, well, how many months do I want to skip? I also want to skip April, and I can put the particular payment date. I can put a 15, or I can simply put the end of the month. But in this case, you might want to check and put the specific payment date. This way the system knows how many payments it needs to skip. Of course, I need to put amount, frequency, and payment frequency, and now my term is all correct and I can submit. There are other terms, and there are 3 type of terms: the prepaid, the incentive, cash, and the initial direct cost. You will notice that you have no dates to enter. All you need to enter is the amount. The prepayment in itself, it's a type of term that it's assumed to be before the end of the contract, so everything has to be recognized right at the beginning. So all the dates are set to the beginning of the ROU. As you know, the prepayment is only effective the right of use asset, so it's not going to have any effect on the liability. Hence the reason that all this setup that you see here is made. So you won't need to have any other dates for the prepaid, and it will be just the same if you're choosing to have an incentive cash amount. Of course, it will be of the opposite sign versus the prepayment, or if you have an initial direct cost, the same treatment as the prepayment. Let's say you are going even further and you have even one lease end type of term, like the purchase option, and it will be the same for the termination option. The only date that you will need to select is the first payment date. So when exactly the termination option, the purchase option will happen. Now, This is about the four dates that we have: the first payment, last payment, beginning and end of the contract. Once again, very important. The user responsibility towards inputting the dates is essential. It's very important that the user check. It's very important that as you get to the schedule, you perform the validation of the payment. So in order for me to showcase that, I will need to approve this contract so we can get at the all column schedule level. I'm approving. I'm a power user in this build. And now I have the activation group created as I'm approving the contract. And in here, as I'm jumping to the terms and condition, I can see the terms that I have entered. I have my base rent, my prepayment, and my incentive free rent. Of course, you could have so many others. And as you are used to our upload features, you can upload so many other terms in here, extensions, and even lease and terms. In order for us to check the schedules, I will have to send to assessment. This is the point where the system is calculating the schedule. So now I can
Sorry,
select.
Catalina.
Yes.
I think we have a question from Tiesa.
Yeah, go ahead, Tiesa.
Go ahead.
I was just like wonder, for example, if you have the payment frequency in the payment frequency as 0 and also the amount frequency as 1 month. And in my example, we do like the payments monthly, and we are using the both. We are using like one time, and the payment frequency we are using as monthly, and the amount frequency as one time. Is this the best way to set up in Nakisa, like amount frequency as one time and payment frequency as one time as well? Or if I do amount frequency as one time and payment frequency as monthly, it is correct the same time? It is the same.
Thank you so much, Tiesa. So first of all, there is no right and wrong. It really depends on your specific case. And in these scenarios, in the scenario that I'm showing right now, I have chosen one-time amount frequency. So let me just go back to the terms and condition, and you can see my amount frequency is one time, my payment frequency is monthly. What does this mean? Is that I'm performing every month a payment one time, and it will be the same amount every month independent of something else. So even if I have partial month, I will still be paying this amount. Now we do have a lot of other options. Yes.
No, you go ahead.
Okay. We do have other options. So the amount frequencies, we can have it month, we can have it year, we can have other, and we can even have it day. But just let me explain a little bit. The amount frequency, it will serve to calculate how much you pay, and then the payment will say how often you pay. Depending on the contract, because the reason we have this option is in response of the terms and conditions that exist in the legal document. So you can have payments that are calculated per day or per year or per month. So those are the type of amount frequency that take into consideration the specific number of days in a payment period. Whereas the one time, and I would say it is the most used, means that you make the exact same payment following this frequency, the monthly frequency.
So if I put amount frequency one time in frequency and payment frequency one time and January to December, they're gonna consider it one time until 1 year, for example.
It
correct?
will be only, so if you put amount frequency one time and payment frequency one time, it will mean exactly one payment, and that's it.
It's not gonna count in monthly if I put the first payment date in January and the last payment date in December, for example.
No, it will still be only one payment. because as I said, the last payment date, it's a cutoff. What we're saying is like after this date, I have no more payment. But the cadence and the amount of payments is based on the combination of these four: the amount frequency, payment frequency, and the first payment date. But what I was trying to show here, as you get to the schedule, that's where you can realize, for example, oh, it's not what I wanted. And if I look at the payment schedule, and you can see the payment really in the first section here, where you can see the period count, period month start date, the period payment date, and then you have the actual payment. And you could have a different type of payment terms. Very important, you can check here the total payments in this column here. This will tell you how much you are paying for each period. So to your example, TSI, if you put one time, you will see here only one payment, and then there will no longer be payments, and then will be an indication for you in case that's not what the contract says, to come back and do the modification. So that's why it's very important that the validations are performed. And one of the things that we typically recommend, we know that more and more our clients are using the upload facility, so then it's not so easy to follow this. It would be recommended to prepare beforehand the payment schedule, so you can follow what you see in the all column schedule with that. Right?
Okay, thank you.
You're very good. All right, so we did a tour of those four types of dates that we have in the terms. Now we will jump into the activation date and posting date, and we'll come back to the effective date because this is relevant for events. So now, if I am happy with the schedules here, they match what I'm seeing in the contract itself, and it's based on the policies and so on. And I can go to all years to do some other preliminary checks, and some very, very easy to do is always make sure that your net book value is 0 at the end of the contract. Make sure that your liabilities are 0 at the end of the contract, but it all starts with the checking of the payment. So if your payments are the ones that you intended, the minimum lease payment that you see here, if your effective interest rate is the one that you intended, then everything else is just a calculation. So of course you want to check the others, the opening balance for liability and for asset, but in some instances that would require some extensive recalculation or validation. Keep in mind we are always being SOC audited, so those validations are already made for you, but you want to keep in mind to check the payments and interest rate. This is very important because it's based on user input. Once I'm happy with the validation, I can come back to my activation group and complete the activation. So I'm approving. As I have a double reporting standard here, I need to choose something for my US GAAP. You know already all these steps. As you have multiple contracts, you can do them through the workflow mass transition, so no need to do them step by step. I need to set up a reception date. And this is where we get into one of those dates that it is important, but has less relevancy into the calculation. The reception date is pretty much a date when the goods are received, and this is something that you can use for asset tracking, so you can include that date. So it's something that you will need to enter, but it will have no effect on your calculation. So at this point, I'm ready to activate my contract. So I'm clicking into activate, and I have activation date, posting date, and document date. 3 other dates that we are talking about. So the activation date, this is really the date of putting in service of the asset, the date when we'll start using it, we'll start calculating depreciation. Typically, the system is going to suggest something here. It's going to put the beginning of the contract, the beginning of the ROU. However, you have the option of changing even that. In a lot of situations, you might have a delay in putting into service an asset. So instead of January, you can select, for example, February. And for such a situation, you will get this warning in here. For the time being, it is a warning, and there isn't an additional validation that we can enter. So that's very important for the users to make sure that if they have a situation when the putting into service is delayed, yes, they should be using an activation date which is after the beginning of the ROU, but if it's not the case, to really check this part. So the users will get this type of message telling them that the input activation date is different from the ROU, and of course asking them, are you sure? But if they don't necessarily, if they do this by mistake and they click submit, there is no turning back for such a contract. So everything will be pushed, everything will be, all the schedule will be pushed by 1 month. So this again, it's a very important step and something to be confirmed, to be validated prior to activation. Now, the activation date, we talked about this, the posting date, and might remember Haley mentioned it. This is your accounting recognition date when it will appear, especially for your ERP and for those of you that are SAP integrated. This is the date when you are going to see the affectation in your GL's accounts. So you might want to consider your posting settings in Nakisa to make sure that you are in an open period when you are choosing your posting date, or if you are choosing a posting date that is different than the activation date. I'm going to go with the same as activation date. The period is open here, and the document date is simply a traceable date. If you want to say, well, you know what, I created this document in September 18, so that's what I'm going to use. So this is just for documentation purpose, and it's an user input choice. Well, I'm clicking submit, and I will have my contract activated. So we went over the some of the dates that have no impact in the calculation or the all column schedule, but they're nevertheless important. You can use the document date for reconciliation purposes, for example, to check those entries that you made at a different date than they were supposed to. And I realize we only have 4 minutes left, so I'm just going to talk a little bit more about posting date, and we'll leave the rest of the topics for next time. As I'm going into the view postings, and I'm going to perform a manual posting here, but this is exactly the same for all the entries that you perform in batch. We are going to see once again document date, posting date, and we also have translation date. Once again, the document date might, and now I'm stressing on the might not have any relevance unless you are linking the document date to the date of the recognition of the company currency translation. So this is a setting that you can set up in the backend, and I want to get you to that. As we are in the backend in the manager page or in the master data configuration, and if I'm choosing a particular company, I want to point your attention to something within the accounting setup. For the exchange rate type, you can choose whether your translation date type is the posting date, the translation date, or the document date. So document date might have further relevance if you are linking the document date to the translation date type. So this is relevant for all the companies, for all the applications that are using parallel currencies. So they display the transaction not just in contract currency, but in company, local, and further on, of course, for group currency. So the document date might have more relevance than just tracing the details if you are linking it to the translation date. Now the translation date as well, as you saw in the settings, we can link it to the date when the system is going to look for the spot rate to have this transaction entered. But you can also specify it for a specific case on the spot. If you have certain settings and you wanna apply a special rule for a certain entry, you can use the translation date and input the exchange rate. And this is also going to be available. All these dates are also being available in the batch posting, so you can do the exact same entry. And so I wanted to open the floor to the questions if they are. And as I mentioned, we will continue our talk on the dates in Nakisa.
So there is no hand raised for now.
Okay, so anybody has any feedback? All right, I had a last announcement to make, so I'm coming back to my presentation. So just to recap a little bit, as we talked about the dates in the terms, activation date, posting date, we haven't got to its active date. We're going to discuss about that next time. We'll be sharing with you all the details here. We, however, started to talk about some of the other dates. We talked about the document date, the reception date, and translation date. And we'll be covering the other dates in our next session. But before you go, I wanted to tell you that we'll be hosting a webinar to talk about the evolution of Nakisa Financial Suite and to talk about our next generation. And this webinar is going to be held in October. We have the link for you to enroll. I'm going to be one of the speakers along with our director of product, Arun Taneja. So we welcome you to come in great numbers, and if you have questions to direct them to me, you have the contact as you register as well, and really quickly to show you our link here. So the link that you will have in your deck will get you to this page here for you to enroll. And by the way, as we have Alana here, we'll be giving just a quick peek, a sneak peek into this version in the user group that we'll have this Thursday, and we hope you can come as well. So thank you, everybody. We'll wait for you on our next session in October. Take care.
Thank you.
Thanks. Have a good day.
Thank you, everyone.